if you're an owner listening to this and you're a little iffy about the person who's handling your finances, it's time to find somebody new.
First, I would just make sure that they do a sanity check and make sure that their numbers are real. Very simple. You start out with the business problem. What is this business problem that you're experiencing? And then when you add this person in, what is that cost going to be, right? What is that all-in cost going to be?
Hello. Nailed it, listeners. I am so pumped about this conversation today because by overwhelming questions and feedback from our audience, you all roofing contractors all over the country, this is a hot button topic. This is absolutely necessary for you guys to be able to build strong businesses, to be able to reach your sales goals and still be profitable, and to build businesses that are future-proofed and that are not, crumbling after a couple of years. I'm so excited to welcome Rob Tokay to the studio today. If you are brand new here, I'm Elizabeth Lytle. I am our head of community here at Contractor Dynamics. I've been here for the last 4.5 years actually, and absolutely love it. Again, if you're brand new, we are Contractor Dynamics. We are a marketing training company specifically for contractors. We specialize in roofing. Rob is very familiar with this industry. And so we're going to dig in. Rob, tell us a little bit about yourself.
Absolutely. Thank you for having me. I am Rob Tokay. I am a Pittsburgh native. I am married with 4 children ranging from 16 months to 19 years old. So there's a big wide range, and I got a very good reason to get up in the morning and bust my butt. I come in the finance. I have a finance background, basically degreed in accounting, master's in information systems, some Lean Six Sigma training, and I'm a CPA, licensed in PA. So I got a lot of schooling and a lot of training that helped me do what I do best, which is help small businesses. My history as far as how it relates to contracting is I was the director of accounting and CFO of Tootie Mechanical Systems with locations here in Pittsburgh and one in Tampa. I ran that accounting department for 11 years. Left for an opportunity to buy into a roofing, an exterior remodeling contractor. That would be Big Fish Contracting. So I took on an ownership role and a leadership president role, and then ultimately the CFO as well, running that company for 4 years. And since kind of changed my really where my passion went, and it really is in finance and accounting and helping small businesses. I just felt like there's definitely that need. Small businesses, I will go to my grave saying that that's the lifeblood of America. There's the small business, and those small businesses, oftentimes you have owners that know what they do what they do best, right? They know how to provide a great service for what they're providing or a great product for what they're making. And they often don't have that skill set of the finance and accounting and management, forecasting ability to then help run and manage the business and grow the business profitably, also with a positive cash flow. And so there is where I kind of can bring in my superpower, bolt myself on to help them, give them some guidance, give them some peace of mind, really, too, and help them continue to develop their business, their organization. So awesome. Here we are today.
Very good. Here we are today. Well, I want to let you all know who Rob is to us at Contractor Dynamics. And then I want to dig into some of the common headaches and challenges and roadblocks that we're hearing that you all may be able to identify with if you're listening to this. But first, who Rob is to us. So we've known Rob for a couple of years now, and Rob is actually our fractional CFO at Contractor Dynamics. So Rob has done a couple of things for us. Rob has been a fantastic advisor and consultant and leader to us in helping us ensure that not only are our finances logical and cleaned up and make sense, that we've got some clarity with what these numbers mean, but Rob's also done a really, really excellent job of helping us understand the story that our finances tell and be able to plan well for the future, so that when we're, coming up with some numbers for what we're going to do this year, we're actually thinking about the expenses involved with those kinds of numbers. We're thinking about who we're going to bring onto the team. We're thinking about what these numbers mean for individual team members, how they're actually going to keep us on track or off track with our vision. So we've been able to have significantly more clarity and understanding of what we really need to be paying attention to on a weekly, monthly, quarterly, and yearly basis. So we're super
Mhm.
thankful for Rob. Previously, I was sitting in a seat where I was trying to make sense of our finances, and I was banging my head against a wall, and there were some teary days where I was saying, who can help with this? And Rob has provided so much clarity to us. And Rob also has come into our mastermind, our group of contractors, and help provide some clarity and some understanding for our contractors as well. So Rob is a fantastic resource, and we're super excited that you're here today, Rob.
Yes, thank you very much. Yeah, definitely was. It was a great opportunity to work with you guys directly, just help you with your business and really just kind of get things cleaned up, get things organized, right? Because the one key piece is you need to have structure, right? You need to have consistent structure, and people, while some people may hate structure, what they hate more is lack of structure. You know what I mean? Because chaos will drive you crazy. And it was just like getting that structure in place and then layering in like forecasting, layering in planning, like putting together a business plan, a well thought out business plan, and then backing you guys up whenever you're like, hey, we want to add on this type of a role. How does that impact our financial statements? How does that impact our bottom line and our cash flow? And I can very easily give you guys a peace of mind of where that goes and what you guys need to do to help support that from a financial health perspective. So
That's right.
it's been
Very
good.
excited. Yeah, awesome. We've certainly had some bumps in the road, but one thing that I
Sure.
have absolutely loved about working with Rob is that we not only have somebody behind the scenes who's some, third party who's crunching some numbers and looking over things and sending over reports. We actually have a real, true trusted advisor who's invested in the success of Contractor Dynamics,
Mhm.
who can say, hey, listen, I know we're doing this, but I'm going to give you the advice that maybe we need to go in this direction, or maybe we shift a little bit to ensure that we're on track with what you said you wanted. And you've also done a great job of ensuring that we have other systems and processes in place to be able to support the clarity, to be able to support where we're looking to go. So I appreciate the advisor that you've been to our team. But let's shift into talking to our listeners directly for just a moment.
Yep.
Um, if you can relate with any of these scenarios, you're in the right place, and we are going to address these specific things individually today. So,
Mhm.
first scenario, let's say that you're a fantastic salesperson, roofing, you've started your own business, and
Mhm.
maybe you have QuickBooks and you're trying to figure things out on your own, or you're not really sure what to do next. Maybe you've got, a buddy of yours or your wife or someone like that who's handling your finances, but
Mhm.
you probably need to do something different, or you're kind of ignoring it because you're really good at these other things and the revenue's working, and so something
Mhm.
doesn't feel super broken, but
Right.
as you grow that you need a different step. You're in the right place. We're going to talk about what you should be focusing on, and the time period in which you might consider finding someone like Rob to support you with those kinds of things. If you're
Mhm.
in a scenario where you've gotten to the end of the year a few times, or you've gotten a few quarters in and you've realized, shoot, we did not plan for this. Shoot, we did not think about this. Hey, we actually ended up far less profitable than I wanted us to be. Or, hey, we thought we were on track, but our pricing or the way we were paying people, our comp structures, or these kinds of things actually didn't support where we were going, then you're in the right place. We're going to talk about those specific things today. We're going to hit on a couple of things. We're going to talk about getting clean finances, what that needs to look like. We're going to talk about, financial projections. We're going to talk about the things that you need to plan for and include as you're making your plans, as you're setting your goals, so that we're not, pie in the sky, hopeful, wishful, only focused on revenue and not thinking about the rest of the picture. Sound good, Rob?
Absolutely.
Awesome. Love it. Okay. Well, let's talk about maybe some common headaches or pain points or mistakes that you see from business owners who are maybe in their, first, let's say 1 to 3 years. What are some common
Mhm.
mistakes that you see that people make with their finances?
I would say in that infancy stage, my thing is that a lot of business owners are going to manage to their bank account. So bank account positive, it's full. we're winning, right? We're doing really well, and I can take more out for maybe going on vacation or buy something like a new car and treat my wife to a nice brand new, you know, diamond earrings, right? You get a little aggressive because you feel like you're winning, but the bank account doesn't necessarily tell the full story. Because that bank account could contain a litany of customer deposits for work you didn't actually do yet. You owe that customer that amount of money that they paid you in advance of. You still have to pay for your materials. You still have to pay for your people, your crews that are going to do the work. And next thing you know, you've overspent yourself, and now you're playing catch up, having to pay them, and now all of a sudden bank account goes down really quick, and you're like in a position of like, oh boy, now I got to make up for it and start to oversell and get more deposits. And it starts to, all it takes is one warranty job or two warranty jobs, and then things start to really get into trouble where you're out borrowing from a future work to pay previous work. That is a scenario where I can see happen in real time.
That's huge. Yeah, focusing just on that dollar amount that's going up. Looks like everything's good. Spending money before we've really truly earned it. That's a big one that I think a lot of people, depending on the way that they structure their business and how
Mm-hmm.
quickly they're collecting, I think a lot of people can
Right.
fall into that for sure. What other mistakes? Let's say we're actually in the 5 million range. We've hired some people
Mm-hmm.
onto our team. We're in growth mode. We want to go big.
Yep.
Wanting to
Yep.
break, from 5 to 10, 10 to 15.
Mm-hmm.
Let's say in that era, what are some common headaches or some common issues that you see in that area with finances?
Yeah, so there could be a couple of different paths here or avenues of error where you got things kind of miscoded, aren't organized cleanly. Chart of accounts, your accounts and your that represent your financial statements don't make as much sense. So you're not getting real true information. You know what I mean? And with that, like, it's tough to manage to that. In addition, oftentimes, in accounting, there's like what's called the matching principle, where you're matching revenues and expenses associated with those jobs in the same time period. So you can kind of see, you got to have a much smoother way of viewing your gross profit and net profit. Whereas you're booking revenue maybe sooner or expenses sooner and then revenue later, you really can't tell month to month how well you're doing, because you're going to go like in a roller coaster ride, up and down throughout the months and through the year, where you really can't get you can't get a good confidence in your numbers. Another issue I sometimes see is where's the source of truth? Because often in these small businesses, you're working with a couple of different softwares. You're working with maybe the QuickBooks on the accounting side. You got another software like a CRM and an operational software on the front side, and you're not really sure where you want to manage, like how you're managing the business. What reporting are you going to get out of which system? That's really the source of truth, and so there can be cause for confusion there. And then just really you got something.
Pause for 1 second. Rob, can you hear me okay?
Yes, I can.
I'm going to have Pedro cut this
Uh-oh.
part.
You just froze.
Can you hear me? Testing, testing.
Yes, I can't hear you.
Okay. I'm going to have Pedro cut that section for just a moment. Everything got
Mm-hmm.
really,
Mm-hmm.
really sort of pixelated. I don't know. I think that may be on my end, actually. So let me close
Okay.
out a couple of things. I'm going to have him cut that section. Maybe I have too many tabs open or something here.
Okay.
Can you hear me clearly right now?
Very clear.
Okay, got it. Cool. Okay. The good news is your upload on my end looks really clean. So I think that may have been a glitch on my end, but I wasn't talking, so I think we're okay. Will you,
Cool.
though, that little section that you were just giving, can you
Mm-hmm.
start over there just so we can ensure that piece wasn't that the audio wasn't going out for that?
Yeah. Where do you want me to start at the very beginning, or do you want me to cut into the second, the
You can
multiple
cut into
spot?
the second. Yeah, cut
The
into the
second
second
one.
piece of that.
Okay.
Yes. Yeah.
Yeah, so the other possible area of issue is really when you have a company that's using multiple softwares to run their business, right? You got the CRM operational software, you got maybe the back office software like a QuickBooks managing your financials, and you're not really sure where the source of truth is. It's inconsistent in both, and it's really trying to make sure that integrations are functioning the way they are supposed to, and there's an understanding of where you're getting your information and where should you be getting your information for reporting purposes. And so that can make it very challenging to see if you don't know where to go, and if neither of them are consistent, like with information you're looking for, you may be misinformed, and therefore you're not making the right decisions at the right time.
Okay. Now, Rob, let's zoom out for a moment.
Yep.
Right now, I'm a business owner and I'm busy and I'm pulling in a
Mm-hmm.
bunch of different directions and I'm wearing a bunch of hats
Yep.
and the bank account is
Mm-hmm.
going up and it feels like I have things kind of connected. But
Mm-hmm.
I'm not necessarily looking at the full picture like you're talking about. Let's zoom out for a moment.
Mm-hmm.
Right now, it's fine.
Yep.
Got money in the bank. My
Yep.
people are getting paid. My salespeople are happy. Everything's fine.
Mm-hmm.
Let's talk about
Mm-hmm.
big picture. What are the long term effects of continuing to operate that way?
I feel like that's still a reactionary approach, because all it takes are a few things to go wrong. Leads start to go south a little bit, or maybe if you're in roofing in our area, you're going through a freeze right now and you can't get any work done. So it's like you're not prepared necessarily for that. And it's like, well, what do you do in those situations? It's always nice to have a plan in place, right? What happens if leads start going sideways or south, and jobs we can't get done when we think we're supposed to. Now you're like scrambling, instead of we know we know how to handle this in the event that this happens, and the financials. There's the health of the organization. The financial health of the organization is positioned to absorb those types of downturns unexpectedly.
Awesome. Okay. Yeah.
That's one. Yeah, and I think just another one is really you got to always, as a small business, you always have to be thinking about growing, how to get better, how to grow profitably, right? Because if you're not growing, you're in a way you're dying, right? You can't get complacent. Complacency just stunts growth, and it allows competition to rise up, right? And especially in the Western PA area, we've noticed a lot of new roofing companies popping up. I was driving down the road and I saw 3 billboards, all different roofing contractors. I knew one of them. The other 2 I never even heard before. So competition's coming up at all the time. The barrier to entry for roofing is not very high. And so you're constantly combating that, right? Because those new entrants are starting to take away what you as a business owner have already, and you don't want to lose that, right? Because you want to protect the money coming in for you, and also the families you support.
That's huge. Yeah. Okay. Let's transition and talk about, we talk about clean finances. We talk about,
Yep.
having things shored up the way they should be, coded the way they should be. Let's just talk
Mm-hmm.
about what that really means. Practically, give us kind of a definition of what that really means, what that looks like.
Well, I think it starts with understanding or speaking the same language, right? And I think in my case, oftentimes it's like working with the ownership team of how they want to see the financials, and does that make sense when you look at a profit statement? So, I would say very first, right off the top, obviously you got your revenue, but then you got cost of sales, right? So that should be more of a variable cost that should follow with revenue, right? It should flow with revenue, and you should see both kind of as revenue goes up, so does cost of sales, but also so does gross profit. Knowing that those things are categorized in that space, in that spot in the financial statement, the profit and loss statement, makes a big difference, because below gross profit, you really have your payroll, your marketing, your overhead that's typically fixed, right? So you have to know, like, you built the company, you have people that are supporting it from the back office and the sales team and everything, and the marketing. You want to make sure that you're getting enough gross profit to cover that and beyond that, right? So that the rest is the bottom line in your net profit. And knowing how to put things in those buckets helps you see like what we have to do as an organization, revenue wise and gross profit wise, to make sure we're covering all of our expenses and then some.
That's right. All right. Let's talk about in terms of there's kind of two scenarios here that I want to address. The first would be,
Mhm.
all right, I'm kind of starting from scratch and I want to ensure that things are clean from the beginning. And then there's the second
Mhm.
scenario, right, where we've been in business a while, things seem to be going okay because we were all making some kind of money, but we know that we need to make some adjustments. And so maybe there's a cleanup that
Mhm.
needs to be done. Let's address those
Sure.
two scenarios. So I'm starting from the bottom. I want to ensure that things are clean from the get
Mhm.
go. Are there any specific practices or systems you would recommend from the beginning as I'm starting my business to ensure that I'm clean from the get go?
I think it really starts with building that chart of accounts in your financial statement, in your software, right? It's knowing, basically knowing what each account that you have set up, what it means, and what that story is it going to tell for your business, right? Every line. So you really do have to start granular, building that chart of accounts, where it's going to show on your profit and loss statement, and then making sure that you're actually categorizing things as you go, with that. Now, typically, QuickBooks will have like something where it's like, if you tell it the industry you're in, it'll kind of suggest what your chart of accounts should look like. And now it's really just saying, does this all make sense? Sometimes that's just, when I think about it, though, when you think about like an owner who's, a roofing contractor or a plumbing contractor, that's probably the last thing they care to do or care to even think about, right? They just want to go sell jobs and do the work, right? It's the back office. So that usually falls by the wayside. And I would just say, understand like you understand what you like to do, what you love to do, what you're good at, and focus on it. And maybe you should consider backfilling with somebody that does know how to do those things and set you up on the right side of the, right from the starting point. You know what I mean?
Set
So
you up
I
for
just,
success so that you're not going backwards, so that you're not
exactly.
this massive cleanup. You're not then at the end
Right.
of the year going, where did I go wrong? Absolutely.
Exactly, and why I don't even know what this is telling me, because when you're in that, you're just in a land of uncertainty, and then you go where you know best. You go back to your bank account and say, okay, if good, if up, if positive, yay; if getting close to zero, bad, and that's not good to
Sure.
be in.
Sure.
And then
Yeah.
the middle of the road, that's where I think it's still, you run the risk of, typically in these situations, you have a bookkeeper, you have somebody that's kind of handling the books back office, and you got to get a feel for, do they know, what they're, how much, what kind of experience they have, right? I've talked to clients where they have, they have some person in that role, but they have no accounting experience, and they're just kind of figuring it out because they're the person that raised their hand. You know what I mean? And that could put the problem with that is that could put your business at risk. You know what I mean? For a number of reasons. One, if they miscategorize something, if you have an owner that's taking a salary through payroll, and they're categorizing it as owner distribution, they're actually going to pay double tax on that, because owner distribution is in the balance sheet. It has nothing to do with profit or loss. You're actually taking it out of the expense line and putting it as a distribution. So the owners actually putting themselves at risk of paying tax twice on their salary, which is, who, I don't know anybody in this world that wants to pay extra to their federal
Not
government.
excited about that for sure.
No,
Well,
so you.
Rob, you're mentioning, having someone, raise their hand and say, "Oh, I can do that for you. I know QuickBooks. I know how to navigate around. I've heard of
Right,
that before. I took a class once." So let's
right.
let's address that specifically then, because I do see that very
Mhm.
commonly in this industry, where we find a
Yep.
someone who took a class once, that went through a
Hmm.
finance class once in college 10 years ago, and
Hmm.
they said, "Sure, I'll
Hmm.
handle it for you." And what they
Hmm.
do is they say, "Here's a report at the end of every month," and the owner says, "All right," and maybe it makes sense, maybe it doesn't. If it's something's
Hmm.
green, if we're not in the red, then they think it looks good.
Hmm.
Let's talk about
Hmm.
two things here. The first thing, let's talk about, what kind of things should I be looking for? You said find someone who knows what they're doing. Well, how do I know? What questions should I ask? How do I
Hmm.
vet the people who are going to be touching and handling my finances?
Yeah, so I mean, I would, as simple as it sounds, and as maybe it's as obvious as it is like I would start with, like, their training and education. I mean, taking a class in QuickBooks once or a few times, doing a few YouTube videos is definitely a very risky proposition. Somebody that's actually been educated in accounting and understands how information flows from the transaction all the way through to the financial statement, and how that's going to impact not only the progress of the company throughout the year, but also what are the tax ramifications on the back end. Because a lot of times, you get to the end of the year, your financials are done, and you don't know, you're not even 100% sure they're clean, and then you hand them over to a CPA firm that's going to do your taxes, and they either have like major questions and adjustments that need to be made, or you're staring at a very large tax liability that you never saw coming. And typically, you're not prepared as a business owner for that to come down the road. You know what I mean? You kind of got an eye on it, and you may park some money away in a savings account, but it's probably not as much as you probably should have, right? And now you're in react mode, and now you're chasing that liability, right, to have to pay that, but then you're borrowing from future work, and it starts that snowball. And you feel like, and the thing is like, that's where contractors get a bad name, because they have the greatest of intentions, and most do a really good job and do really good work, but they fall victim to the business side of things and not understanding that, and they get nailed on in a situation where it could be a tax liability, or they think their bank account's greater than really the business is doing, and now they're chasing that work, and then something can go wrong, and now they're in trouble, and they're almost like they're almost fully in debt. And then you have the ghost situation where a customer's calling and no answer.
Yeah, yeah. So if we don't want, as a business owner, obviously none of us want surprises. We want
Correct.
as much predictability as possible. Obviously,
Yes.
there can be situations where we're going to have to take calculated risks. We talk about that with
Mhm.
marketing all the time. Of
Yep.
course, our visionaries love those calculated or not so calculated risks, right? But the
Right.
reality is, especially with our finances and our taxes, we do not want surprises. So it is very
Right.
important that we are not just taking, putting a warm body in the seat of handling our finances. That can be a massive mistake and very detrimental to our business. So being
Mhm.
extremely intentional with every position that we fill for our company, but
Yes.
specifically those ones where people are helping us with our finances, they're helping us with our projections, they're helping us with taxes. That's extremely important. I think that's
100%.
one of the reasons we're so thankful to have you in place, because you are one of those people who has the schooling, has the background, has the experience, and also
Mhm.
have the desire to educate
Mhm.
and have the desire to be that trusted advisor to say, hey, I know
Yes.
that this is what we're working on right now, but these are the
Mhm.
long-term implications. So let's talk through those. That's huge. So I would highly recommend, if you're an owner listening to this and you're a little iffy about the person who's handling your finances, it's time to find somebody new where you know that you have 100% confidence that
Yep.
you're in the right hands. Because that's a big, we talk all the time about marketing being an essential function of the business. Well, if we don't have any money at the end of the year, we're, that's a major issue. If we're,
Mhm.
having all sorts of liability, if we're having to make major tax adjustments, then that's, going to greatly affect the future of our business. So that's extremely important. Um,
Absolutely. And that's the thing too, is we look at a couple of things too. It's just like, it's not just profit of the business, right? It's cash flow of the business. And those are two different things, because you could be billing out a ton of work and executing at a high margin. But if the customer is not paying you, then you may show profit on one, on a P&L statement, the profit and loss statement, but your balance sheet looks like, hey, we don't have as much cash flow coming in because our accounts receivable has ballooned up, and now we got to chase after this cash that we've earned. So two different sets of financials, two different viewpoints, but both very important.
Absolutely. Okay, let's talk about some best practices when it comes to clean
Mhm.
finances. Here's what I want to talk about for just a moment that we haven't talked about quite yet is
Mhm.
let's talk about team members as we're a
Mhm.
growing business. Now let's talk about our businesses who don't we're not an owner operator trying to do everything ourselves right now. Let's talk
Yep.
about our more established business. We've grown, we've put some different people in some different seats. I,
Mhm.
the owner, am no longer handling all the finances. However, let's talk
Mhm.
about who should touch them. So let's talk about who should touch them, who should look at them. Should we have
Mhm.
multiple different people touching finances on the team, and what does that look like specifically for roofing companies? I would imagine
Mhm.
there's, maybe we've got our CFO or somebody who's, or a third party who's, doing the back end of things, helping with
Mhm.
projections. I would
Mhm.
imagine we've got somebody who's hunting down and handling accounts receivable. Maybe we've got somebody making phone calls, chasing
Yep.
checks, that kind of
Mhm.
thing. I would imagine that maybe we've got some other team members who need to review information as well. Walk us through what kind of best practices are.
So it really it's a matter of how much transparency you want to have first to your people. One as an owner, and how far down the financials you want to actually show. But you can also set security where you can actually set security within QuickBooks where even certain people only have access to certain information, right? Because it is confidential in nature. Because when you start to talk about money and you talk about profits of a business, some people, it's confidential information, quite frankly. You know what I mean? It's really to the at the discretion of the owner how much they want to share. But I would think, it would start with, if you were operating an EOS, your leadership team should have access to the financial statements, you know what I mean, and see it all the way through, because they are playing a major role in one aspect that would directly impact the financials. But even still, it also depends, I guess, on whether how do you compensate your people too. If you're compensating them based on like maybe gross profit of the business, it's probably worth sharing that up through that information, because so they can see, how the company's doing, and it gives them peace of mind of what maybe they can get in terms of what a bonus would look like, whether it be on a quarterly or annual basis. But I guess coming around this horn, I mean, I would say leadership team for sure, and then really be selective in the back office of who has access to what information and how sensitive it is, and you can set that security accordingly.
Okay. Okay. All right. I'm the busy owner. I have hired somebody to kind of handle things for me, but
Mm-hmm.
I know that I can't just be hands off. I can't ignore it, right? I need
Mm-hmm.
to pay attention. What are the primary things on maybe a weekly or a monthly basis that I, the owner, should be looking at in terms of finances?
I would say your cash balance is always still important. You don't want to manage the business to that, but you always want to see what that looks like. That's a good weekly metric. And if you're in like residential contracting, your accounts receivable over 30 days, that number is very important, because it lets you know how much, in dollars, how much how much you need to intensify the collection efforts, right? And if you need to get other people involved. I speak about what's called current ratio, and that's kind of a reflection of your working capital, what your current assets or your accounts receivable and your cash match up against how your current liabilities are, what you owe, your accounts payable, your credit cards, and things like that. It just gives you a good idea of like your ability to pay your current bills. You know what I mean, and that gives you some peace of mind as well. On a monthly basis, I think sales are important. Sales are good weekly as well, weekly and monthly. Proposal dollars, weekly, monthly, are important, because you got to try to figure out like what that, if you're not quoting out enough work, and you're closing at a close ratio of say 30%. If you're only quoting, $50,000 a week, that's the math is going to tell you that you're not going to be able to close enough in terms of sales. So those are good leading indicators. Again, also lead quantity, how that's coming into the system, and do you have enough leads to support your sales team. Then monthly, it's your revenue. Would you do in revenue and gross profit? Those are important. What your payroll was maybe on a monthly basis, and what your net income and net operating profit is. So I think those, as far as what you don't want to do is you don't want to throw so many numbers at you where it's just like nothing becomes important, because it's just too much. It just overwhelms the owner.
That's huge. Yeah, absolutely. Okay. Well, any other advice that you would give to business owners who are
Mhm.
They're trying to make sure that they're building a business where they're
Mhm.
able to bring on new employees, they're
Mhm.
able to be profitable, they're building revenue year over year. Let's say that they're already focused on marketing, they're generating
Mhm.
leads, that kind of thing. Any other advice that you would give them to ensure that their finances are clean and that
Mhm.
they can sleep at night not worrying about what's going on with their numbers?
I think it's always good to get a second set of eyes on the financials, whether it be a review or I wouldn't know. I don't know if I would go as far as an audit, but I definitely think like having another set of eyes on to take a look at the financial statements and just give another company or service provider the ability to just ask questions and look at them from another perspective. You know what I mean? And that just kind of helps give the owner peace of mind. Whether their team they feel it either drives home that they're very confident in their team and that just solidifies that, or maybe they were a little uncertain and it's just like, okay, that also proves that that we may need to upgrade.
Okay.
What I wouldn't do, and I would do that at like mid year versus end of year, because end of year you start to get into a point of like, okay, taxes are going to be coming around the corner, and you're almost too late to make change, right? But like if you do it in the middle of a calendar year, you got an opportunity to make course corrections and make things matter, especially come tax time.
That's huge. Rob, when I'm considering someone to help me with my finances, it's going to be maybe a third party. Should
Mm-hmm.
I specifically find someone who has experience in the industry that I'm in? So our listeners are roofing contractors
Yeah.
primarily. Should
Yep.
they find someone who has experience in roofing, or does it matter?
I think it levels up the value that's being brought to the table, without a doubt. I mean, accounting is accounting, but understanding there's a lot of other dynamics. I think in contracting specifically, and just metrics and just things, how you classify things and how things are kind of like just understanding the nature of that business, right? Because business is totally different. You're talking about putting on roofs, and you're talking about seasonality, and you're talking about throughput management, right? When I say throughput management, it's just like you only have a certain windows of time to get things into the system and get things executed. And if you're not managing like that throughput, eating up that backlog, I feel like the accountants or the accounting team will just be reporting the news, and it's not it takes them on a backseat where someone like with experience in roofing can be out in front of it and see things much sooner and be more anticipative of challenges that are coming down the pike.
Similar to what we talk about at Contractor Dynamics with the
Mhm.
value of having consultants and advisors and coaches and
Mhm.
trainers who understand the
Mhm.
consideration process, the buying process, the difference between retail and insurance, and the
Mhm.
the way that impacts marketing. We find that
Mhm.
it's extremely valuable because we speak the language, we can go deeper, we have that kind of
Absolutely.
experience, we understand the nuances of marketing for roofing versus marketing for real estate and that sort of
Mhm.
thing. It's the same thing with your finances. Finding somebody who understands a little bit more of that big picture can, again, like you're
Mhm.
saying, give you so much more value and confidence because, again,
Mhm.
they get more of the short term and the long term as well. So I completely agree with that.
Absolutely, yeah, another good example is like your workers' compensation. That's a big thing. That's not maybe as important to your company, right? But workers' comp is a big thing. It's a high priced expense, and there's certain documents and things you need to have in place, or you're going to get really hit hard on a workers' comp audit. Certificate if it's insurance, naming the company as additional insured, making sure they have enough insurance to qualify, right? Having a legitimate, W-9 form, so you properly 1099 them. These things are vital, and if you don't have them and you're actually reacting to a workers' comp audit, it's probably too late, and that contractor may be already be gone. So you actually end up having to pay workers' comp on that expense unnecessarily.
Pedro cut right here. Rob, your what you were just talking about is a good reel. It's a good short clip, but I want
Mhm.
you to do this. I want you to start off by saying what we just said, which is that it's extremely valuable to find someone who can support you with your finances, who has experience in the roofing industry. And will you give
Mhm.
and then lead into that quick example about workers comp? Will you say that? Do you
Mhm.
see what I'm asking you to do? Will you repeat that one more time, and then I'll go to the next
Yeah.
question? Okay, cool.
Yeah. All right. Ready?
Yep.
Okay. Yeah, so it's so important to have somebody that actually is familiar with the contracting world. Specifically, if you think about workers' compensation insurance as an example, what you don't want, that's a big number. That's a very high expense on the profit and loss statement. Not You may not have that issue with contractor dynamics with your business, but it's huge in contracting. And if you don't have certain documentation in place, you could be in store for a substantial audit that you're going to have to pay out what you shouldn't. Some of the things you would want to have in place is you're going to want to have a certificate of insurance, naming your company as additional insured. That actually helps qualify and prevents you from having to pay workers' compensation insurance on that contractor. If you wait until an audit, it's too late. And now you're chasing after them for a certificate of insurance, and they may be long gone. And now you're stuck paying that bill.
Awesome. So ensuring that you're finding somebody who has that kind of understanding is huge. Well, Rob,
Yeah.
let's talk just a little bit about financial projections and financial
Mm-hmm.
planning. Tell us,
Mm-hmm.
so for those of us who are, maybe brand new and have no idea, they don't really know. They're just they're new into business. Maybe they came from selling for another company. What are financial projections? And then let's talk
Mm-hmm.
about the process for creating them.
Sure. So if you look at a long term, if you're starting it from the beginning of the year, you're in December and you're thinking, okay, next year, what does next year look like? It's putting together a business plan, and you got to think. You start out with really looking at, well, what did the current year perform at, and what can we do this year? And most times you're going to want to start with what revenue, right? Revenue is the easy one. We did 2 million. Well, let's double that, or let's triple that, right? We have big aspirations, but then it's like, okay, well, what happens when we have that much velocity coming into the system? How do we get that revenue at that size? Is it going to be with the same team? Probably not. So we got to start to backfill and plan for hires to help support that type of growth, both on the top line side and also on the back office side, and everything in between. Thinking about, well, so a lot goes into that. You plan out revenue, and then you got to fill in what the existing team looks like, and then you got to say, okay, what are the gaps? Is there capacity at all, or is there not? And what do we got to do about it, right? There could be issues with crews. Maybe the crews can only do so much, right? 1.5 million. Well, in this cruise, we only have one or two. Like, we're going to need to hire another crew. We're going to need to hire another project manager. We're going to need to hire someone in sales to help sell, that extra 1, 2, 3 million, right? You need extra people. So it's planning that out and then parking it, like actually adding those people in, what their comp plan looks like. How much is it going to cost the company in tax? If they hit those targets, what's that going to be in terms of a commission? All that stuff has to come and flow in through the financial statements. But also, you got to think about other things like added mobile phones, added software costs, for user accounts, all these extra vehicles, right? You got to think about, and what's a vehicle cost per year? That could run you up $15,000 to $20,000 a year. You think about it, the fuel, the depreciation, the insurances. And so all those things, while it sounds so simple to just say, yeah, like we just need to add these people, it's just like, well, what does that translate to the bottom line? And are we going to be more profitable or less profitable when we get to the end of the year, right? So it's translating the need to grow at a certain number, but then bringing in people and the costs associated, and what we need to do in marketing, a marketing spend to bring in leads for that, to support those new salespeople, to flush it out and say, is this a reasonable plan? So you start there, and then what happens is as each month goes on, you also want to start to put together what you would call a forecast, or projections, right, of how the year's going and how should we end based on trends, right? What are we trending, and that helps tell you, okay, if we're going at this rate, the same rate that we did last month or last couple of months, what does that look like for our bottom line as we finish out? And it's good to see that and give you an owner like either peace of mind or, hey, we got to make some changes now or we're going to be in trouble when we get to the end of the year. And so those things, all of these planning and forecasting techniques are so important because you're in a proactive approach. You're not reacting to everything where it's almost too late. You know what I mean? When you get financial statements, from last month, that's almost like yesterday's news. It's like, where are we actually going? You know what I mean? Did the Titanic hit the glacier? You know what I mean? And we're all, the band's going to be playing until it sinks, or are we in a position to avoid the glacier altogether and get to, Pleasure Island?
Amazing. Yeah, yeah, that's huge. Rob, all right. I want to ensure that next year I am going to crush my revenue goals. I'm
Yeah.
profitable. I have the
Mm-hmm.
cash flow I'm looking for, and that year over year I can
Mm-hmm.
make sure that I'm growing in a healthy way.
Yep.
When do I start to gather data? When do I start to create these projections? When do I start
Mm-hmm.
working on this?
I mean, I would say, you really want to start, I would say, after the third quarter of the previous year. You get through three quarters, you got a pretty good feel of what you did and how you're going to pretty much finish the year out. And so you got enough data too to support like what expenses have all really landed and what you should anticipate in the new year, right? Whether you're going to make changes, add on, either implement new software or use existing, but either way, you pretty much have an idea of that. You got enough of a sample size to kind of prepare for the next year.
Okay.
So I would
Okay.
say start in October.
Absolutely. Let's say I am I'm on the leadership team. I'm not the owner. I'm not in charge of the finances, but I'm on the leadership team. And I'm wearing a
Yep.
lot of hats and I'm feeling a little bit of the pressure in my
Yeah.
department. And
Mm-hmm.
we're nearing the end of the year and I come up with the bright idea that we're going to hire a so and so in my department who's going to take on some of these things so I can do some other things. And
Mm-hmm.
I want to bring that to maybe the owner, maybe the CFO, whomever, and say, hey, we've got to hire this person. What are you looking for?
Mm-hmm.
Let's say from your specific seat, what do you need to
Yeah.
hear for
Mm-hmm.
you to sign off on? Yes, we can hire that next person next year.
Very simple. You start out with the business problem. What is this business problem that you're experiencing? And then when you add this person in, what is that cost going to be, right? What is that all in cost going to be? And then you add after that, what's going to be that relief valve or that return on investment? How is that going to solve that business problem? And how is that going to actually help the company grow and grow profitably? It's really that simple. It's not. You look at it from any way of like whether you're looking to hire a person or invest in a new technology. In the same sense, you're still looking to say what's the return on investment going to look like?
That's huge. Rob, I will say one of the things that I hear from owners sometimes is yeah, we're pumped. We did, 4 million this year, whatever. We're doing 6 million this year. And
Mm-hmm.
then when we start to ask some questions about how we're going to get there, there's a bit of a breakdown, right? We're going to hire a few more sales guys and we're going to get there. Well, our existing sales guys are already doing this, so that's how we're going to get there. And so
Yeah.
I love the point of you mentioning that as you're making these plans, as you're setting these goals,
Mm-hmm.
we have to not only have the data to back them up, but in hopes that we're also closing at the same ratio, we're also bringing in the same kinds of leads, that sort of thing.
Mm-hmm.
But also we need to understand what every additional team member is going to cost us
Mm-hmm.
and ensure that that's factored in at the beginning of the year. So your recruiting plan
Mm-hmm.
plays a big piece into
Yep.
these financial projections, and if we're not thinking about those, we're going to miss the mark. We're going to find that maybe we're having a dip where we were expecting for things to go up, right?
Mm-hmm. That's absolutely correct, and that's the thing, especially when you're talking about sales. Is like, okay, you're going to add a person, and that person's going to do this. A typical salesperson is going to sell $1 million or 1.5 million, and it's like, okay, that's fine, but like let's reverse engineer that and say, okay, if they're going to do this, what's going to be their close ratio for a new person if they have experience in this industry or not? If they don't, you're probably going to have a much lower close ratio, possibly, right? It could be like 20% or 25%, and for that you got to think, okay, if that's the case, well, what are you going to need to quote in terms of dollars, right? And based on average ticket. And then what are you going to need in terms of number of leads, additional leads now is the business going to need into the system? And then what does that do for marketing spend? Do we have to level that up, right? Or like you're saying, recruiting, to make sure that we're getting a high caliber individual and we're not just hiring bodies that they're going to come in, you train them up and then they flatline and then you just recycle that same process, right? You want to make sure your first hire is your best hire. And so all those things, I just like went around in a circle of like what is all involved in bringing on someone like in a sales role, and how important it is, and how that impacts a lot of different departments in cost centers.
Yeah, that's huge. Rob, before we get into maybe some real live examples, case studies, stories like that, I'd love to ask you any other final advice that you would give to a business owner who wants to ensure that they're planning well for the coming quarters, that their projections are on track. Any other advice that you would give them?
I would just make sure that they do a sanity check and make sure that their numbers are real. Are they the real numbers? I can't tell you how many times, working at 2D Mechanical or Bob Toody's like, are these the real numbers? Because if you don't have the real numbers, how the heck can you project out what, the next few months or how's the year going to finish? Or how can we plan for the whole next year? Right. So it's like really doing a heart to heart, like a sanity check. Are these numbers absolutely real? And are they reflective, indicative of how the business is performing? If yes, great. Now let's start planning and let's start putting together like what we want to do in terms of growth and people and resources and go from there. But I feel like you can't go anywhere if your numbers aren't clean.
That's huge. Yeah, absolutely. Earlier, Rob, you mentioned a financial review. If we're not 1000% confident that our projections even make sense, that we actually have clean numbers, that our numbers are real, and we need a review, is that something that you do?
Yes. So we actually, before we take on a new client, we actually do a financial assessment for them. No charge. We just take a look. They give us a couple of years of financials and some activity, some maybe like job counts. And we kind of put a 30,000 foot overview of like, what's the health of the business look like? And sometimes there's things that just don't make sense to us at all. There's just some numbers that are way out of whack. And that obviously brings us into when we have that meeting, we talk about it and we ask some qualifying questions to kind of get to the answer. And there's like, bookkeeper was booking it to this account. I'm not sure why. But like, it's just like you think about that and you're like, man, you're actually running your business and you got things going in places they really shouldn't. And it's just giving you a false sense of either security or just insecurity because you just don't know what's real. And so it's really good to have somebody take a look at that.
Awesome. So if I need a review, if I need an assessment, how can I get in touch with you to ensure that I can get something like that done?
Well, you could reach out to me. Our website is kpc-cfo.com. There's an About Us and Contact Us page, so you can actually just put in a submit a ticket. It'll go right to myself and my partner, and we'll kind of take it from there, reach out and coordinate and get rolling.
Good. Well, I would highly recommend that if you're listening and you don't have 100% confidence, or if you just want a checkup to make sure that you're on the right track. Rob's a great resource. Rob will give you some great feedback. So I would highly recommend checking that review out. We'll put some credentials for Rob below. That way you guys could get in touch with him directly. But Rob, let's transition. Let's do some rapid fire questions. Sound okay?
Yep.
Cool. All right. We answered a couple of these already. So I'd love to know, Rob, what do you love about financial work?
I love I love business. One, I love making numbers tell a story, good or bad. Like it's just like saying, okay, what is this telling us? Where is this company going? How healthy is it? What do we need to do to make it better? Usually, and most times financials are, the company has some sort of an issue, right? There's always going to be a business problem that crops up. And a lot of times the numbers are going to tell you that and point you in a direction to start to solve that problem. And that's what I love about the challenge of like, let's figure it out and let's turn this thing around. And the joy of seeing a business owner say like, man, things have really turned around and we're heading in the right track. You can see the energy in their face. And that gives me great joy.
That's awesome. I love it. All right, let's say that I would like to understand my finances a little bit more. Maybe I'm kind of
Mhm.
interested in that
Yeah.
kind of thing. Any books, podcasts, classes, courses, anything like that that you would recommend?
So I would say like take some courses in like an entrepreneurial course would be good because I don't necessarily think a business owner needs to get into the nuts and bolts of accounting. One, I don't think they would enjoy it. Usually you're built for something like this, right? It's your makeup or it's not. And so like why get tangled up in the weeds of like a debit and a credit and like understanding, current, a liability versus distribution. It's just better to just get a high level picture of like understanding how to read a profit and loss statement and how to read a balance sheet and what does that tell that the business is doing. I say I would do that.
I love that you say that, Rob, because that's one of the things that we say all the time to our prospects and our client companies. They'll say, well, shoot, I need to learn everything about SEO. And we'll say, well, here's the reality. The reality is that you probably don't. We love that you want to learn a little bit more. And here's what we would recommend that you learn.
Yeah.
These particular questions that you should be asking. Here are a few key components that you should be looking at. But the rest of it, leave
Yeah.
that to the experts who do that, who have that's what they love. They want to be behind the scenes, writing the
Yeah.
blogs and doing the backlinks and all of that. You, as the owner, that's not what you need to be doing because you'll get into it and you'll hate it. You'll get into it, you won't understand it. You'll get into it, and truly, it will be a shiny object, and it will
Yeah.
end up with not the result that you're looking for. So focus on the things that you're
Yeah.
really good at, that you love. Leave that to the expert, but be there to ask questions and hold them accountable and ensure that you're in the right direction. So I would completely agree with that for sure. For sure. Good stuff. Well, then how about another podcast or book, maybe on leadership or entrepreneurship that you would recommend?
Yeah, I would say read Rocket Fuel. I think that's a really good one because it really, what it does is it directs the owner into what type of role they are really best suited for and what they would think they would really love and be of value to their business, whether it be the visionary or the integrator. That's a big key piece. And then it's like, okay, knowing that, like, where is this business lacking from that point forward? As far as like contracting, I would say, this is a bit of an older book, but reading Eli Goldrat's book called The Goal, it's on theory of constraints management. And really that's important, I think, in terms of that whole throughput, really being able to manage a backlog, execute and get as much revenue and gross profit into the system as you possibly can. Because once you lose those days, if you lose days to weather, it's being able to adapt to that and being able to drive that throughput and revenue and gross profit into the system. I think it would really enlighten some business owners.
Good stuff. Awesome. All right. Well, we're about at our time here, so let's go ahead and close it up. But a couple recaps here, you all. The reality is that our finances are the lifeblood of our business. Extremely important to ensure that we have clean, real numbers. Important to ensure that our projections are not just our big kind of revenue goals that we have, but that we have all of the supporting data to go along with that, that we're thinking about what that revenue actually means in terms of our team and our processes and our expenses as well. And then some big advice from Rob is, getting a financial review halfway through the year. So in a couple of months, getting a checkup to ensure that we really are healthy, to ensure that we're in the right direction. And that's something that Rob offers. So if you've been listening and you would love some support from Rob, please reach out to Rob. We cannot recommend him him enough. He's been great for us at Contractor Dynamics and for our client companies as well. You can email Rob. You can visit his website, KPC, like he mentioned, and you can reach out to us as well. We'd be happy to make a connection for you. But thanks for listening. Stay tuned. Coming up, we are going to be talking about marketing planning, and it's a good segue because we're talking about budgeting for marketing, how that influences the rest of your finances as well. Sydney, our marketing director, is going to talk about that soon. So thanks for listening, you guys, and we'll see you soon.
Thank you. See you.
All right.